Hello, folks. Welcome back. Do you know there is a pattern called cup and handle pattern? Yes, you heard it right. Cup and handle pattern. Well, this pattern has the same name as a typical cup and handle, but it is not the one used to drink tea and beverages. So, first, let me show you how this pattern looks and how this pattern appears on the chart. Here you can see this pattern is similar to the cup and handle, where the bigger side is similar to the cup and the smaller one will be taken as handle. Let me minimize the chart so you can see how the market went into a bullish mode just after the formation of this pattern cup and handle. I will show you its different examples on different charts with the results and execution rules. But first of all, let me take you to its simple illustration to show you how to trade it, how to execute it, and what are the rules to trade this pattern. So this is a cup and handle pattern. This pattern is a bullish pattern which usually appears in the early stages of an uptrend when the market has reversed from a downtrend, and it will continue the uptrend when this pattern is appeared on the chart. So this is how the market will turn in a round shape, will form a pattern such as the cup, and then it will go up, it will form a high at this level, and then it will form the handle of the pattern which completes the pattern. So what we will do, initially we will take entry at this point, at this area, at the very bottom of the handle, and we will place our stop loss below the handle, or for more safety, and if you are having any insecurity about the stop loss, you can even place it below the cup. So this is how this pattern will be traded. The second area we will trade this pattern is when the market breaks this high, which is the high of the pattern, and at this point we will take the entry. So how much we will target? Let's say this pattern is formed in 100 pips area, at this area. So we will also target 100 pips profit. And once we take the entry at this point, so we can place our stop loss below the handle, which will be less likely to be triggered by the market fluctuations. So these are the simple rules of this pattern, and one should always keep these rules in mind while trading this pattern cup and handle. Now let me take you to the charts to show you its different examples. So we will start from the same one as we discussed at the start of the video, and which I have indicated. This was the cup area, this was the handle area, and we should have take the entry at this point. So while taking entry at this point, we should have placed our stop loss below the handle, or for more security and protection, we should have placed it below the cup area. So you can see then it would be less likely to be triggered. So that was the first area where we should take the entry, and this area, which is the high of the pattern, is the second area. Let's say this area. So while taking entry at this point, we should have placed our stop loss below the handle area, and you can see it was less likely to be triggered at this point. So how much profit we should target, how much pips we will target once the pattern is formed? So let's say it took the market 50 pips to form this pattern, we should have targeted the same amount of pips. And you can see the market would have easily targeted and easily achieved this much pips and easily achieved this target. This was the first example. Now let me show you the second one. You can see the one I'm indicating it. This is the cup with handle pattern. Let me zoom in a little. So this area indicates the cup and this one indicates the handle. Let me clear it. So if we would have took the entry from the handle, we should have placed our stop loss below the handle, and for more security, for more protection, we should have placed this stop loss below the cup area. So this handle area was the first point to trade this pattern. The second area was the high of this pattern, which is this area. And let's say we took the entry from this point. So the best area to place the stop loss was below the handle, and you can see it was less likely to be triggered. Now how much area, how much profit we should target? We will count the pips, the area it took for the market to form the cup and handle pattern. This pattern formed almost in 180 pips, and see the profit target would have been easily achieved if we would have took this entry, and we can say it was easily a 1:2 trade. From 1:2 I mean 1:2 risk to reward. So this was the second example. Now let me show you the third one. Yes, so which is this area. You can see the chart. The market turned round at the bottom and formed a cup shaped pattern, and the second point it formed the handle. So the first area to take to trade this pattern was from the handle area. We should have placed our stop loss, let's say below the handle at first place, and at second place we should have placed our stop loss below the cup area for more protection. So this was the first point to trade this pattern. The second was above the high of the pattern, which was this point. And let's say we would have take the entry at this area. So then we should have placed our stop loss below the handle area, and which is less likely to be triggered in all the cases. This pattern is tested by most of the professional, and it almost 80% of the time works extremely better. So now the point is how much area, how much profit we will target for this pattern. So again, I'm showing examples of all the three charts. It took the market almost 50 pips to form this pattern. Now minimize it a little, and you can see the market would have easily achieved this target. Yes, the market got consolidated at this point, but it's okay. We will have to wait for the pattern to either hit the target or either hit the stop loss. This is how we will trade this pattern, and I hope this video has helped you. See you guys in another video with another strategy and another pattern. Take care.